It's a nice idea to look back on the previous year and forward to the upcoming one as we begin the new one. The next year may be revolutionary for Tesla investors. There are a number of indications that for investors in the electric vehicle firm, this could be a historic moment. For Tesla investors, this is an incredibly exciting time due to a number of amazing variables coming together. Are you prepared to question received knowledge and come along with us as we investigate the world of Tesla investing? Introducing ARK Invest Management LLC CEO Cathie Wood. She is more bullish than ever about the massive electric vehicle company, even in the face of market instability and doubters. Cathie believes that over the next 5 years, Tesla stock will increase by a factor of 5 due to her unmatched knowledge and track record. Come along as we explore this bold investor's thoughts and learn the reasons behind her unshakable faith in Tesla. This video is essential viewing for anyone interested in the future of the electric vehicle industry, whether it is because of her recent shopping binge or her futuristic forecasts. But first, hit the like and subscribe buttons. Cathie Wood is more confident than ever about Tesla, the top electric vehicle manufacturer, even though many individuals have lost faith in the firm and its CEO, Elon Musk, and have sold their Tesla shares as a result of the company's recent turbulent performance. Cathie Wood is more bullish than ever about Tesla's future, even though February has just begun. She believes the company's stock will rise 5 times over the next 5 years. In the first U.S. trading session of 2024, Cathie Wood, the CEO of ARK Invest Management LLC, purchased nearly 176,000 shares of Tesla, according to ARK's daily statistics. When many other investors abandoned the EV producer, this signaled a reaffirmed belief in the business. Tesla's stock price has dropped by 12 points since October 3rd, when their most recent buying spree started, despite the company offering significant incentives. Tesla also failed quarterly delivery projections. ARK trading data gathered by Bloomberg indicates that Wood's ETFs had acquired little over 938,000 shares of the electric vehicle producer. This October through December period was the first of 7 quarters that ARK purchased Tesla stock. Given that many people are aware that 2022 was a challenging year for Tesla, the business aggressively reduced the price of its goods in the US last month, giving customers a $3,750 discount. However, the market leader in EVs made an apparently bold move that didn't work out, although it was eventually discovered that the tax incentives wouldn't apply to all of the automaker's goods. One could claim that Tesla was offering discounts on automobiles the prior month in order to establish updated tax credits that would be coming out in 2023. Tesla nevertheless let down investors by reporting lower than expected fourth quarter deliveries. Following Tesla's third consecutive quarter of deliveries, several analysts reduced their 12-month price projections for the company in response to the shortfall, resulting in the lowest average Wall Street expectation since October of 2024. In spite of this, the average target price indicates that within the next 12 months, the stock will rise by an amount well over 100%. Tesla stock has dropped dramatically since Elon Musk took over as CEO of Twitter on October 27th, even though the market has increased by 4% during that time. Retracing the stock chart to its peak in late 2021 reveals an almost 70% decline in Tesla shares. The fourth quarter's lower than expected deliveries disappointed investors, but on the plus side, Tesla's market share is still growing quickly. Despite a difficult year for automakers in 2024, Tesla saw a 40% gain in car deliveries in that year. Over the past few months, Wood has increased her stake in Tesla, and she hasn't stopped even when the stock has turned south. The CEO of ARK Invest, which manages the widely held Energy Select Sector Fund, which tracks the stocks of energy companies, said lately that the market was acting illogically. However, Tesla will continue to increase its market share. The company recently made the decision to drastically cut prices, which hurt its rivals by forcing other manufacturers to follow suit. We predict that during the next 5 years, the world's oil demand will decline by at least 30%. ARK Invest CEO Cathie Wood said, "We are as bullish as we have ever been about Tesla as a result. ARK continues to have high expectations for Tesla and projects a tenfold growth in the company's valuation." This optimism stems from the assertion made by Wood that Tesla can double its addressable market by reducing the cost of an electric car. Wood cited the Tesla self-driving taxi platform as an example of the kind of creative transformation required. According to Wood in the book In Harm's Way, no other car maker will be able to match or outperform Tesla's combination unless they wish to lose money on their vehicles. When asked what she thought about large companies competing with Tesla in the development of electric vehicles, Wood emphasized that it matters a great deal in terms of range and performance. Brand loyalty will decline, in her opinion, when consumers begin to switch from gas-powered to electric vehicles and consider the features of several different models. Wood thinks they're failing miserably at this. CEO Cathie Wood expressed her opinion that the conventional auto industry needs to find a way to transition to electric vehicles and that gas-powered vehicles will become obsolete in the next 5 to 10 years in an interview with Yahoo Finance last year. Tesla has become the leading company in this sector of the economy and is currently the largest automaker globally. Tesla is positioning itself to take the lead in the electric vehicle industry into the next century. During an appearance on CNBC's Squawk Box in mid-October, an ARC executive expressed confidence about the leading electric vehicle manufacturer, despite the possibility that future financial returns may not be as high as they have been in the past. The executive said the company had a lot of irons in the fire and that investors should think carefully about whether this is a good time to buy. What makes ARC bullish on Tesla was revealed by Tasha Keeney. Keeney notes that the electric car market is still in its infancy and that it currently represents a very small portion of auto sales. In spite of this, most people consider Tesla to be a leader in the EV and autonomous vehicle industries. Furthermore, Wood said she thinks Tesla will switch to an autonomous taxi platform in 2024 in a different interview with Yahoo Finance. Tesla will probably have to make some gross margin concessions in order to reach its target of growing deliveries by 50% yearly over a number of years, a goal that the company has warned it would not be able to accomplish in 2022. However, I think Elon is still as committed as ever to seeing to it that Tesla maintains its position as the leading global seller of electric cars. Even though Tesla has announced a planned shutdown of its Shanghai facility and lowered prices across the board in China, optimistic experts and investors are optimistic that the company will continue to be at the forefront of the finally gaining traction electric vehicle revolution, which also includes advancements in the solar energy and battery storage sectors. However, doubtful analysts and financiers fear that the business will not live up to its hype and will only become another product company instead of creating something genuinely novel. While some analysts predict that Tesla will deliver 1.8 million to 1.9 million cars in 2023, up from about 1.3 million in 2022, a 40% increase, critics of the corporation claim that it is a heavily subsidized, pricey, and susceptible to competition business. If 2023 delivery projections are fulfilled, investors will be convinced that Tesla's projected 2023 profitability are realistic and that the stock price may have dropped too much. Let me summarize the reasons these so-called experts are incorrect. First off, Tesla has grown astronomically over the last several years, and this growth pattern is anticipated to continue in the upcoming year. The company has achieved notable progress in growing its market share in the electric car industry, producing more vehicles and developing new technologies. Furthermore, Tesla is expected to see significant growth as a result of its recent entry into the energy storage sector. According to predictions, the energy storage business will develop to be a multi-billion-dollar sector in the near future due to the increasing demand for electrification and renewable energy solutions. Moreover, the company's continuous efforts to lower the price of battery technology may result in even more revolutionary discoveries. For Tesla investors, this is an incredibly exciting time due to the combination of all these variables. Overall, ARK Invest and Cathie Wood are more bullish on Tesla shares than they have ever been. Strongly in favor of innovation, Wood has been outspoken in her endorsement of Tesla and its planned cutting-edge initiatives. Recall that sound decision-making is essential for success in the financial markets. Prior to making any investments, always get financial advice. Please hit the like and subscribe buttons if you enjoyed this video. I hope to see you in the upcoming video.